All right, good evening, everyone. Hope you're all doing well. Now we're back at it again for lesson 8, a fairly simple lesson regarding protecting your stop loss with protected highs and lows. So in this lesson, we're going to cover what actually makes a stop loss protected, being at a protected high and low, what actually develops and validates a protected high and low through live examples I've taken in live trading calls, and so on and so forth. Now, when it comes to protecting your stop loss, as we had mentioned, it always needs to be set at a protected high and low. Now, I see so many people online, I see so many students, I see so many just people who ask me why they're getting stopped out before the trade goes in their favor. Simple, you're trying to be cheeky, putting your stop loss at a high of a fair value gap, a high of an inversion, or just in general, any general PD rate. Like, it makes no sense because there's quite literally nothing that stops price from wicking the high of the fair value gap, the inversion, or any general PD rate, and then going in your direction. Now, this tends to come from ego, comparing yourself to these people on TikTok, X, or just in general, just social media. You're seeing these slideshows, these trade recordings of these people top ticking or bottom ticking with a 10-point stop loss, a 5-point stop loss, yet you will see that not a single one of them can actually provide a track record. Not a single one can provide consistent payouts, or let alone even do this live consistently. Like, they cannot execute these positions consistently because of the following reasons. Either A, they are on a paper account, they continue to enter positions, and if they get wrong with their bottom tick or top tick, they just reset the account and try again just to post on social media until it eventually plays out. Or they're just spamming evaluations, or of course, don't fall for the trade of it logo or the AMP live logo. You can trade demo on those platforms while still having the logo on TradingView. So don't get that confused. A lot of these guys will never be able to trade this consistently. Now, I don't want to go on a rant, but again, don't fall for the trap on social media. Do not compare yourself to the trap on social media, because majority of the time why you try to have a stop loss like this is because you're trying to compare yourself with other people on social media. Yet, again, everything I just listed, they cannot actually do this live, nor consistently. Now, don't get me wrong, on my ICT Disciple account, I don't post losses much, but what I don't do is I don't post unrealistic trades with realistic stop loss or TP. They're all trades according to the entry models that I teach on my YouTube for free. And it's just me on that account executing those models. Now, while I don't lose a ton while I record my trades, I do lose here and there. And every single day, I'm live showing my results, trading my models, my 30-minute power 3, my 4 power 3. And yes, there is losses, but even the times that I'm wrong in my position, it tends to play out in our favor. And this example right here is actually something I'm going to cover because I failed to protect my stop loss. Had I protected my stop loss like the lesson I'm going to teach here, this trade would have been the biggest trade I would have taken ever in trading and in the live call. Now, onto the proper lesson. Now, let's get into the simple. Is that a protected high or low will be a high or low that has SMT attached to it. As we can see here, in this trade that I had taken live, and this was the most recent one earlier this week, just 3 days ago, it looks like this. As you can see, prior to my entry off the CISD, which I taught in the previous lesson, there was SMT with the data high. As you can see on ES had taken out the previous week high, forming SMT there, while on the lower time frame, we then form SMT with the data high. Now, that is also your previous 90-minute power 3 high, not just the data high. That is what essentially makes a high probability high, or more or less a protected high. That here there is where I can actually place my stop loss to confirm that it is protected. Now, let me pull up the chart from that day. As we can see, had you been trying to be cheeky with that stop loss, you're going to see how easily you could have been wrong there. Now, excuse the little mess on the chart. I was making some annotations for a notion, but as you can see here, how do you put your stop loss you know, a cheeky 10 points. If you had you entered off the CISD, had your stop loss for a cheeky 10 points, boom, you get wicked out, you get stopped. Or let's just imagine you were treating this as a breaker block right here. Of course, for breakers, you tend to use the bodies. You know, putting your stop loss at the high of the breaker, there's nothing stopping price from tapping into that breaker, the high of the breaker. Nothing stopping price from running up 10 points. You cannot do that. That is what you cannot do, and that is what I'm here to teach. Now, as you can see here, by having our stop at a high probability SMT, we then prevent unnecessary losses by trying to have too tight of the stop. Now, similar to what I taught in my previous lesson regarding SMT, the only SMT that matters is time-based SMT. Now, the reason this trade was so successful, the reason we did not end up running out this high, is because the high that we formed SMT with was a time-based high. It wasn't just any random swing high within here. None of that. It was a time-based high, and that is what makes it high probability. Now, as you can see here in this next... Actually, before I go into that, something I forgot to mention is that a lot of you guys, again, it comes from the ego. You want to have a tight stop loss because you want to act like you're risking, you know, $50, $100, $200 to make, you know, $1,000, $2,000, $3,000, and so on. But you cannot do that. You always have to protect your stop loss, and you have to drop the ego. You have to reduce the sizing. So instead of having heavy sizing with a small stop loss, that's just ridiculous. You are screwing yourself in the long term. You have to reduce your sizing and increase your stop loss. That's the only way to actually protect your position. I see so many people trying to record their trades. You know, they want to enter with heavy size. They're under 50K funded. They want to enter with 2 minis. But of course, since it is a 50K funded, they can't risk that much. So they're only trying to risk, you know, 10 points, which is $400 with 2 minis. Yet they're going to get stopped out over and over again. Again, it comes from ego. You have to have humility. You have to drop the greed, and you have to drop the fear. You have to increase your stop loss, reduce your sizing. That is the only way to be profitable long term. Now, into a additional example, you can see here another trade that I had taken in a live trading call. You can see here, this is the higher time frame, the 50-minute. Now, as you can see here, executions weren't just on the 50-minute chart, because how do we actually protect our stop loss? We would have to place our stop loss all the way at the swing low. No, every single trade I take, while it is based off of the higher time frame, we always drop down to a lower time frame, which our higher time frame entry model / PD array is engaged with, and then find an entry within there. So as you can see, this was the execution taken. As you can see, this is the 50-minute buy model. Price taps into there, forms SMT. From there, we deliver EQ of the previous day's range. And that is the example we have here. As we can see, Thursday, this day, had displacing down about 650 points, leaving behind a very clear unbalanced range. So that gives us a very clear draw going into the next day, where we have SMT with the previous day high going into Friday, giving us our smart money reversal. From there, we would anticipate price to seek out EQ the range, because even if we were going to go lower, even if we were going to seek lower prices, we would first have to rebalance the range by seeking out EQ before we can validate lower prices again. So the only logical position to take would be longs up to the previous day's EQ. So going into the trade, as you can see here on the 50-minute, we present us with a 50-minute buy model. Now, as you can see here, NQ is the only asset, the only indice to tap into this 50-minute busy. In fact, YM at 9:45 didn't even create a 50-minute busy. Sure, it does at 10 a.m., but not at 9:45. Now that in itself is already a cracking correlation. Price taps into it on NQ, fails to do so on ES, so that gives us our high probability SMT. So then we can drop down to a 1-minute time frame. As you can see, this is the 50-minute busy right here. In fact, to make it easy, I will just mark it out, just so you can see the cracking correlation in itself. Here, and of course, YM does not even create one, so we can't even mark it out there. As you can see, NQ taps into it, ES fails to. That gives us our high probability SMT, and from there, price displaces up, giving us our 2022 entry model. Now, 2022 entry model / CISD, as you can see, CISD is now my main entry model. At the time that I had taken that live trading trade, I was not so much focused on CISDs, but more on just 2022 entry models for our lower time frame confirmation. Nonetheless, now I would take that here. Stop loss at the low. That is protected because it is the low that taps into the 15-minute BISI that gives us our cracking correlation. So two things, we have SMT with the previous 15-minute low / that 15-minute BISI. So two cracks and correlations in one, if you want to say that. From there, entry off of the CISD on the 1 minute, and from there we target EQ of the range. And then we just let it play out. Price runs out the swing high, move our stop loss break even, and then again targeting EQ the range. Such a simple concept which protects your stop loss. Now, had you been cheeky, let's just say you were, I guess technically our CISD was not until this second candle, so had you entered properly right there, you're trying to be cheeky, having a 10-point stop loss once more, you get screwed. You get screwed because on this retracement into this 1 minute fair value gap, price then stops you out because you oversized, you over leveraged instead of being smart, following your rules, properly sizing, and properly trading. That is what you cannot do, and that's why protecting stop loss is so important. Now on to the next example, which regards premium and discount, because, well, for starters, in the future I will do a video on premium and discount, but for now, just refer to ICT's video on it. I guess really anyone's video on it, but specifically ICT, I highly recommend just, studying from the source, unless you yourself have a mentor that you're learning from. However, for those who know, I'll get right into it. So the only time where having your stop loss at a protected high or low can fail while still having the right direction is if you're longing in premium and if you're shorting in discount. Now, this is an example from August 28th, 2024. As you can see, we had all of our confirmations. We had, for starters, this is what the higher time frame looked like. As you can see, for reference, higher time frame was bearish. Higher time frame market structure was bearish on like the 4-hour, the daily, and so on. From there, we formed SMT with our, well, let's just say a significant high, a time-based significant high right here. From there, we displaced down, giving us our 2022 sell model. Now, before we tap into this premium right here, as we can see, before we tap into that premium, this 15-minute CB right here, we tapped into this lower 15-minute CB in discount. Now, this is how you can easily get stopped out because, as we can see, price tapped into that 15-minute CB in discount, giving us our lower time frame cracking correlation. As you can see with YN putting in a failure swing. From there, we have a 1 minute CISD down. Looks like a classic entry model, right? Yes, however, issue is you're entering within discount of this recent displacement range, which was still unbalanced. And due to that, that is what can cause price to continue to fail, even if it gives us your perfect entry model. Issue is on the lower time frame, you're still in discount of this short-term range. Whereas the proper trade would be price taps into premium. And actually, I'll just go into the example now. As you can see here, price taps into premium of this range. As we can see right there, tapping into the premium 15-minute CB right here. And from here, we then displace down 2022 sell model, giving you your classic lower time frame entry. However, now this is kind of where we get a little bit quote unquote saucy. Now, for those who want to study why this SMT causes us to be on the 15-minute time frame, well, do your research, do your due diligence, study why this specific SMT is so significant, what sort of SMT it is, and if you understand that, you'll understand why we're on the 15-minute time frame. Now, on the 15-minute time frame, you can see here that at 10:15, when NQ trades into this 15-minute CB right here, we can see that on the 10:30 candle, we failed to run out the previous 15-minute high. Where then you look at ES at 10:30 runs out the previous 15-minute high, while NQ fails to do so. That is your highest probability lower time frame confirmation. More like confluence, as we talked about in the SMT video. But this right here, that's your confirmation that price is going to seek lower. To be really safe, you can then wait for a lower time frame sell model, lower time frame CISD, and so on, both of which would have been valid for a entry. From here, we get 2022 sell model, and from there, price sells off down to the previous day low. Now, please, please, please study that, understand that, and it will just help you out so much. Trust me. We can just call it the previous 15-minute high SMT. Some of you guys are already aware of that, but again, such a good confluence, especially in correlation with the right time frame alignment. Now, as you can see here, price then displays it down, smashes our TP, runs out the preset low, and then boom, that gives you your weekly profits. And after that, again, after all this, again, something I want to cover was the trade that I did take in our live trading that was stopped out. As you can see here, while having the bias right, having the direction right, and let me actually go to this day because it wasn't too long ago. 410. Right here. So as you can see here, going into this day, the trade entry was around here. Going into that entry, we can see that here we had a very clear unbalanced range left from the previous day. So similar example to the first trade that we had shown. As you can see here, very clear drawn liquidity, very clear direction. So even if price was overall bullish on the higher time frame, even if we were going to continue higher, the first objective in which price needs to reach is EQ of the previous day's range. More or less just EQ of this unbalanced range. So we had a very clear draw, very clear narrative. We had SMT with the previous day high, which I shall show. Yeah, as you can see, very clear draw liquidity, unbalanced range below on all three indices. SMT with the previous day high up here as NQ puts in a failure swing while YM ES run above. Also one additional SMT up there, lower time frame, cracking correlation down here at 8:30 news. Next candle, as you can see here, then giving us a clear draw on liquidity. Now this is where I went wrong, as you can see here, leading up to market open, we then had displacement down, 9:30 opens, manipulate up into that EQ the range, up into that 1 minute SIBI, rebalancing this range, and from there we entered. Now I was trying to be cheeky. I was trying to have myself at this swing high because in my opinion at the time, I was thinking that price was not going to come back up and mitigate it. Now don't get me wrong, price action was not the best right here. Usually we just get straight distribution at 9:30. Sometimes we don't. This was a scenario where we don't, and I got very unfortunate here. Nonetheless, that doesn't remove the fact that I did not protect my stop loss. I did not follow my own rules, and I paid the price for that. So as you can see here, lower time frame leading up to 9:30 open, we can see that here 9:30 open, manipulate ups into EQ of this range. My entry was this. I don't think I can place limit orders on replay mode, but my entry was this 1 minute order block here with our little lower time frame cracking correlation. As you can see, my entry was this 1 minute order block here, not this CISD, not this displacement down here. It was once we retested this and treated it as an order block. Now, I was trying to be cheeky, like I said, having a relatively small stop loss, which again, market overall right now was not low volatility. It was very, very high volatility. As you can see, that unbalanced range that we had shown, I'd have to go to, forget that, let's go on the hard time frame again to show it. But this unbalanced range here, that wasn't, a few hundred points, that was, 2,600 points. So it was a super volatile market, and I was trying to be cheeky because, again, 50 points is relatively a lot for me. If I would, like, I even still entered with, reduced sizing here compared to my normal sizing, but 50 points was still a lot for me. What I should have done was remove the risk, or more like reduce the risk, increase the stop loss. Sure, I'm risking 113 points, but keep in mind, this is to make 868 points. So it's like, okay, sure, I'm risking a lot, but I'm also prepared to make a lot. It was a 1 to 8, just under a 1 to 8 risk reward. And I made the mistake of missing out on quote unquote generational wealth. But I would have been in with reduced sizing. It would have been just a normal trade. But nonetheless, that's what I should have done. I tried to be cheeky, put my stop loss right there because I didn't think we were going to run back up to EQ since it was already rebalanced. But I was proven wrong very fast, and I paid the price for it. Had I been following my rules, following the topic I'm teaching here, we would have been safe the entire time, and price would have played out entirely to my TP, being EQ the range. Of course, on the way down, I would have trimmed, but nonetheless, that doesn't change the fact that price ended up playing all the way down to my TP, nearly perfectly. Which, too bad, so sad. Part of growth and learning, but this is the type of stuff that you have to experience in order to learn. Now, if you guys fail to apply this concept, you will learn it soon enough on your own by continuing to screw yourself, getting stopped out before price plays out. And, well, like I said, you'll learn from your own experience if you don't properly apply this concept. Now, this little lesson I talked about down here, it's exactly what I talked about with the previous 15-minute high SMT, so I'm gonna end up deleting that. But again, this is a lesson regarding protecting your stop loss with protected highs and lows. You have to have it protected with high probability SMT. Now, thank you guys for watching all the way. If there's any questions regarding this concept, any questions regarding how I trade, either join the Discord, ask in there, or just leave them in the comments below and just let me know. Otherwise, until the next lesson, a week from now, 2 weeks from now, and of course, as promised, I am back to consistently posting, and soon enough, going into summer, I will be doing, real life content and so on. But right now, my focus is just teaching, education, and lessons before I do anything, face-to-face content or anything like that. For now, enjoy what I put out, continue to apply these concepts, and best of luck. I'll be posting a new video in about a week or two, and we'll continue to be consistent from there. Until then, you guys have a great rest of your month.